What's up, guys? So in this module, we are going to talk about the best time frames that you can use, how to execute sniper trades, and obviously a scalping strategy that you can use to make a good amount of money in the crypto markets. So starting off with the best time frames that you can use in the crypto markets. So it's not that complicated. It's pretty much simple. I would say the daily time frame, the 4 hour time frame, and the 1 hour time frame is something that I personally use. The daily time frame, what I do is the daily I use for analysis. I use for looking out for some good confluence levels, some good order blocks, or a level that is on the higher time frame that you cannot see on the lower time frame. So basically, I use the daily and the weekly time frame for some good out of the box, or you can say a bird view, a broader view of analysis. And then for the 4 hour time frame, what you can do is you can just obviously confirm your structures that at least if the 1 hour time frame is showing you an uptrend, the 4 hour time frame should also be showing you an uptrend. So 4 hour time frame is moreover a confirmation type of time frame that I use for my particular trades, and execution of trades on the 4 hour time frames is a lot more reliable than the hourly time frame, but it's definitely up to you what you want to use personally. So I execute my trades on the 1 hour time frame as well as 4 hour time frame sometimes, but it depends of what type of trade I'm taking. If I'm taking a particular trade that I want to hold for a longer period of time, I usually prefer 4 hour time frame. And if I want to execute a particular trade that I'm taking for a single day or a day or two, I use an hourly time frame. And obviously the daily time frame is used for our analysis. So hourly time frame is something that I use for my execution. So for example, if you see after this particular candle, I shorted BTC over here, it went lower, it hit the order block, and then it is coming down once again. So most probably if it breaks this particular level, it will complete a head and shoulders pattern, and then I will book my profit somewhere around here, or at least half of my profits in that particular support region. So this is the best time frames that you can possibly use if you want to take some trades in the market. Now let's talk about how you are supposed to execute sniper trades into the crypto market. Now I'm not going to go in depth because this is something that I cover in my live mentorship program, about especially about the Fibonacci. I go in very detail, and I have basically done research on 8 to 9 years of data on the Fibonacci, and that is something that I teach in my live mentorship program. So what basically I use is mainly the Fibonacci order blocks. And personally, what I do in all of my trades, whether it is the crypto market, forex market, or stock market, I need at least 3 to 5 confirmations for my trades, and that is how I have achieved such a level of accuracy. If you are my Discord community member, you know what level of accuracy I have in my trades. So how did I achieve this? It's very, very simple. Basically, what you should be doing, what usually most people do is, if they just see a shooting star candle, if they just see a hammer or bullish candle, what they are going to do is they're just going to buy randomly. But that's not how things work, especially into the crypto markets. In the crypto markets, I use minimum 4 to 5 confirmations. In the stock markets, I use 2 to 3 confirmations for my trades. I need at least 2 to 3 factors telling me that yes, you should be taking this particular trade, whether it is strength and momentum, whether it is Fibonacci, whether it is order block, whether it is imbalance. It does not matter what the concept is, but there should be minimum 3 to 4 or 4 to 5 concepts that should be confirming your particular trades if you want to take a trade into the crypto market. And that's how you will achieve a very, very high level of accuracy. The number of trades will definitely go down, but that will surely shoot up your accuracy with a significant level. So the thing is very, very simple. All you need to do is make sure you confirm. Now in this particular case, like I said, there are a lot of factors that I use personally. For example, in the first case, you can see there was a huge imbalance candle, a huge drop down. Then the volumes were in the favor. That is 2 confirmation. Then there was an order block guarding my stop loss. That's third confirmation. Then the market did a 0.6 level retracement on the Fibonacci. That's the fourth confirmation. And then I would say after that, you can see when the market pumped, when the market dumped, the volume went really high. But then when the market is starting to recover, the volume is drying up. That's yet another confirmation. In total, 5 confirmation in this particular trade. And then over here, after this particular long wick candle, I shorted right after the opening on the opening of this candle. And then you can see the trade is still running, not that much of a profit. I'm still at break even right now, I would say. But let's just see how it plays out. It doesn't matter even if it hits my stop loss, because the concepts that I'm using is making sure that I am taking quality trades, and I'm not just randomly taking trades on the basis of candlesticks and all the chart patterns. Yes, they do work, but you need an extra advanced level of mindset in the crypto market. And obviously, if you watch the second module, you already know what I am talking about. So that's how you are going to execute sniper trades into the crypto market. Now let's talk about a simple scalping strategy that you can use into the crypto market that's going to absolutely blow your mind. So now let's switch to some altcoins. So if you don't know what altcoins are, altcoins ka full form is basically alternate coins. Coins that are other than Bitcoin are basically altcoins. So what you are supposed to do in this particular strategy. So now you already know the concept of order block, what an order block is, how to use an order block. So now obviously not all order blocks are going to be permanent. There are going to be some order blocks that are going to be breaking. So now in the scalping strategy, when a certain order block breaks, so basically what's happening at that particular level, so this is going to be a fight between two big players, and obviously if two big players are fighting, there's going to be an explosion in the price, and that's where we are going to be making money. So basically, let's just say if there is an order block, okay, there's a big player who is trying to obviously short, let's just say 100,000 contracts, but there's one big player that wants to pump the market. So what he will need is he will need at least 200,000 or at least 300,000 worth of contracts to go long if he wants to break this particular order block. Now, obviously, if there is going to be such a huge amount of liquidity coming into the market, there's going to be an absolute explosion. And that exactly is where we are going to be making money. So let's try to go in deeper of this particular scalping strategy and try to understand how are we going to make money on this. All right. So let's try to first find an order block and see where can we, just make money. All right, so as I said, is a scalping strategy. So obviously what I do in the scalping strategy is basically I use my 15-minute or 5-minute time frame. Obviously the order blocks are relatively weaker, and obviously we want to make money where the order blocks break. So that is what the time frames that I use. I use usually the 15-minute time frame or the 5-minute time frame. Now let's try to find out a good up move or a down move, whatever it is. Let's try to first find out an order block. So usually, what most people do is they teach from presentations, they teach from already existing, I would say, things that will obviously make them look good, look smarter. So now this is an order block over here. If you see, the up move happened over here from here directly till there, and this is the order block candle. So now what I would do is I would wait for this particular order block to break. Now, if you see what happened, even if you scalped out this particular trade, where would you enter? I would enter on this particular break of the order block. So if I entered over here, even if I scalped this is a 1% move, and if you use 10x leverage, that's a 10% return. So even 10% or even a 1% move on spot is more than enough for a scalper, especially because scalpers usually target for 2 to 3% moves on the charts, or even 1% is more than enough for a scalp. Depends on how aggressive you are. So whenever the order block breaks, there's definitely a huge momentum, like I said, and I even explained you the logic behind that. So this is something. Now these strategy, I can just tell you what the strategy is. I can just tell you how you're supposed to take your trades, but the thing is that unless and until you backtest it or yourself, unless and until you test it out yourself on the charts, you are not going to understand the whether it works that well or not. So over here we have a good fall, correct? Let's just try to place an order block. So this is my order block, and you see right over here on this particular candle what happened. The market pumped, broke this particular order block, went back a little bit, and then went higher. So this is where you are going to execute your trades. This is how we are going to scalp out the markets. Whenever the order block breaks, there's definitely a big player trying to oppose a second big player, and obviously there's going to be a lot of liquidity in the market, and that's where we are going to make money. So let's talk about the execution, entry, exit, and where you should be placing your stop losses. So if I am a particular scalper, first of all, as a scalper, you don't really need levels. What I personally do, I'm going to tell, and then it's up to you whether you want to follow this or not. If as far as targets are concerned, I don't set targets as per levels. I set targets in terms of percentage. So even if I capture 1 to 2% of uh, move on the spot chart, that's more than enough for me as a scalper. And my stop losses are usually 0.5% to 1%. And in scalping, especially, risk to reward ratio is not that good. Obviously as a scalper, risk to reward ratio, maintaining a good risk to reward ratio is not that possible. So as a scalper, you need to be having a good level of accuracy if you want to be profitable, and that's why scalping is something that requires a very high skill level. And I would not advise complete beginners who are watching this to get into scalping. First, you can start off with normal trading. get to understand how the charts work. We get to get some experience in the markets and then switch to scalping. But this is a strategy that I personally use, and it works very, very well, and it will sometimes it will help you capture huge amount of moves. Because what happens is, for example, over here, if you see, we have an order block over here in Bitcoin, correct? We broke the order block, the Bitcoin pumped really, violently, and this is just a 1% candle in itself, and for a scalper that's more than enough, that what you need. Even if you see in this particular case, if we consider this particular order block break, if I consider this order block, and if I shorted the market over here, I would have captured a really good amount of move. Still here, that's a 2% move in Bitcoin, which is absolutely insane. So as a scalper, this is something that you need. And I'm not going to do the backtesting work for you. Obviously, I'm giving you the strategy. That's more than enough. If you're hardworking yourself, you are going to backtest this on your own. You are going to see whether this works well or not. You're going to see whether this suits you or not. And obviously, I'm sure you're going to make a very good trader. So that's pretty much going to be it for this particular module. So in this module, we talked about how to execute sniper trades, what time frames that you are supposed to use, and what is a good scalping strategy over here. We talked about a scalping strategy that you can use. And as far as the entry, exit, and stop losses are concerned, I set my entry and stop losses, exit and stop losses as per the percentage on the charts. You cannot really as a scalper set as per levels, because the markets, especially in the crypto market, is very violent. The moves happen in a flash, and it might just dump and pump in a second, and you might not even be able to book your profits. So be very active as a scalper. You have to look at the charts all the time if you are a scalper, obviously. And as far as the entry is concerned, you can take an ambush entry. Now there are two types of entries that you can take as a scalper. One entry, personally, I prefer the ambush entry. So over here, let's just say we have an order block. Over here we have our order block. Then if there are two types of entry, like I said, the first entry is going to be in a normal entry where you are going to enter on the candle close. But then the second type of entry, the ambush entry, that I personally use is as soon as this particular level is taken out, doesn't matter whether the candle has closed or not. As soon as this level has been taken out, I will enter over here. I will short the markets. I will make good amount of money. Now, especially if you are a beginner, I would suggest you try out with the closing entry and then switch to ambush entry. Ambush entry is yet again a very advanced concept and requires a very high level of skill, and obviously it has a level of accuracy that is lower than the closing entry, because you give away some of the confirmations if you are taking ambush entry, but the advantage is that you get a good risk reward ratio if you are taking the ambush entry. So that's pretty much going to be it for this particular model. I'll see you in the next module. Thank you so much.